Hey, what's going on, guys? What's up, YouTube? This is TerrenceRe. I got another stock market update for you. We're gonna go over what happened this week, and maybe we can look and try to figure out what might happen next week, right? And try to play look into the future, look into my crystal ball, and also I'm be going over something very important. We'll be talking about option liquidity. So let's go ahead and run through some charts and then we'll get to my main topic, which is talking about options and you know what stock, if you're trying to trade options, should you be trading if you're going to trade. This week we had the bullish market continued. Now you may notice I called it a a bull market. So you see on TV they got different criteria, if it's up a certain amount of percent, or they look to see if it crosses the 200-day moving average or the 50-day moving average or something like that. Look, when it's up into just my definition, up and to the right, this is a bullish move, right? So it may not be, I don't know how long a market got to go for it to be in a classically technically classified as a bull market, but it's going up and to the right. So that's enough for me. Now I got some other little, my little secret sauce for how I, get into it. But just up and to the right. Obviously this was going down. So we want to call that a bull market. Once it crosses over whatever threshold you have, to me it really doesn't matter either way, right? If I think the stock gonna go up, then I buy it or make some type of bullish trade. And if I think it's gonna go down, then I sell it. Keep it simple. You shouldn't care what kind of market it is. Which way is the stock that you're most people just buy stocks so they don't know how to short or anything like that anyway. So you want to find a stock that's doing this, right? So, and this is the SPX, then which is the top 500 companies, which, the S&P 500. So let's take a look at Netflix. Netflix, I've been talking about that for the past couple weeks. It's continued its march higher. Um, as you can see, now I do have it reached the 2618 last week. Well, actually this week. I think the 5th, which was what? That was Monday. So it reached right here, kind of chopped on Tuesday, Wednesday, Thursday, gapped higher on Friday. Now the next level for Netflix is right up around here at 467. And I believe it may hit it. Now, that does Friday it started to sell off a little bit. So that, that doesn't mean that we can't get a pullback into here. But I do see Netflix ending up here somewhere right around 460. So plan accordingly. Now, this is based off of the technical analysis that I use. So you just have to see, what you can do with that. I do own um in my in my Fidelity account, I do own a call option in it, and I went out 69 days. Well, it's 69 days now. When I did it, I think I was right around like 70 something. And I think I owned the 465. So I'm up on that call option, and I'll hold it until it gets in the money. And then we'll see what happens then. Let's take a look at AMD. AMD is the next stock. As you can see, I already got these levels on here. I've been kind of in and out of AMD. Um, let's see, we got a level on AMD, the next level on AMD. If it starts, and you can see it's beginning to, let me remove this, break out. You see this trend line right here? Came up here as acting as resistance, but you can see it's holding. It gapped up on Friday. Our next move up is right up here, right around 142. So we'll see if AMD is going to give us that push to make it up there. Let's take a look at CVX, which is Chevron. Chevron. Now, Chevron is actually the setup is on the intraday. which I have on the hourly 20-day. I had a little pull a gap up, pull back, and we are here. So it's been moving a little slower because it's gonna move with oil. It been kind of jerking us around with oil, but you can see it's up here. It hit the first level and it's kind of chopping. Next level is 2618. And then after that, we're going all the way up here. You can see I got a little alert right here um, to alert me when it gets there. And I'll be ready to take the position off there. So we got Chevron. Let's take a look at Tesla. Tesla's been killing it. I mean, setup in Tesla, you can see it breaking out of this channel. See this channel trending down? Just came right up here to this level at 252. This is the high that it made yesterday. The next level for Tesla, excuse me. The next level for Tesla is, let's see, right around 299. So let's see if we can get to it. Now, I'd be surprised if it went straight there, but it can. If I zoom out to a 3-year chart, you're looking at it. Tesla is just getting it. The all-time high was 414. So, it's just getting coming up off of these lows. It still got a way to go if you're looking at the all-time high. Now, if I'm looking at this right now, if I drew this trend line, one thing about trend lines, you can see that sometimes price has a memory. Let's see what if I drew, and I just noticed this while I'm doing the video. So I would do something like so, and you guys see that line will come right there. So actually, depending on where it hits, we'll see a little resistance right up here, right around this target around 300. Now I do believe that one of the that there was a, let's see, I can always pull up the news and see what the news is on Tesla. So I think the target for Tesla, I was listening to CNBC on Friday. So someone up there targeted 300. Um, it may be in here somewhere, but really doesn't matter. My target is right around, I call it 299. But I do believe one of those little groups came out and said that they had a target. Let's see. I think you can pull it up on here and come to, not that it matters, but I just wanted to see if my target would coincide with theirs. I got the company profile up, and the Trefis estimate. So it actually has an estimate of 210. But I thought I saw on CNBC that one of those pundits said that they had a target of 300. But either way, you can see my trend line runs right across, right where my Fibonacci ends, right around 299 for Tesla. That's the next target. Now, that doesn't mean it's going to go straight there. We could always get some chop around in here, but that's just my target for it. Let's take a look at the diamonds, which is the ETF of the Dow. Now, interesting in the diamonds, the Dow, which has been in a range, you can see it. See, it's just been chopping. It hasn't been participating in the blowout to the top. That's been all Nasdaq, QQQ, and all technology companies. Well, we got a nice little pullback here and a break of the high. So I do see that the diamonds will break out here. Now the diamonds I do own, like as far as like the actual ETF. Now, because it pays a dividend, a monthly dividend. And so I just kind of like just own that, especially like right now. I do think it's going to break out of this range and give us a nice move to the upside once it comes out of here. So, and then also on a monthly base, it pays a monthly dividend. So every month you get a 72-cent dividend. Currently, that's what it is. So I just wanted to run through those stocks, go over what to look for the week, or what I think anyway. What my analysis is telling me. of some stocks. Went through 5 stocks that had some nice setups on them, right? Well, the main topic that I wanted to talk about today is option liquidity. Now, how do if I'm looking to trade some type of option, what am I looking for? Let's close this up. Now, let's go to I'm going to use the first I'm going to go to the SPY ETF for the S&P 500, which is for the most part like the most liquid thing, one of the most liquid underlyings you can trade. Let's go to the trade tab and let's take it out. First thing I'm going to come do is I'm going to come to a monthly, right? And if you're on Thinkorswim, your monthlies, better yet, I'm not going to use the ETF. I'll come back there. Let's go to Apple. The monthlies are going to be in white. And you can see right here what says weeklies. I always want to look at the monthly, and I'll look at the front month. Now, if you come down here, you see, look at the open interest. See thousands of contracts. I'm looking for thousands of contracts at all times. I want to be able to see that, right? Now, let's go look at, so obviously you can see that Apple is liquid, 65,000, 110,000. That's an enormous amount of option contracts that are already open in Apple. Let's look at Meta. Same thing, right? If I come right around here at the money, let's look at Amazon. So you can basically see that all of these are liquid. Now, let's take something, let's look at USO. Now, the monthlies are liquid. Now, I would advise just my advice, what I think. I would advise 80 to 90% of traders should stay in the monthlies. If you're not like, you don't consider yourself, you should stay in the monthlies. You can tell, you can see thousands of contracts. What does that mean when I say open interest, thousands of contracts, right? These are contracts, like volume changes daily, right? So that, like, if the market was open right now and I bought a call here, this would go from 5 to 6. The open interest doesn't change, but because the open interest is showing you what's already there from the previous day, right? And then it would change. If I left this one on during that day, then the next day it would be added to this count. But volume is currently what's going on. But in the monthlies, for the most part, you can see, and you also want to look at the bid-ask spread. You want tight bid-ask spread. That means that on selling, so there's a seller at 119 and a buyer at 105. That means there's about 14 cents of play in between there, right? So you got about 14 cents of negotiation for the most part. You can come in and attempt to buy it at 112, 113. Let's say you do get filled at 114 and you pay, so that'll be 9 cents above 105, right? The tighter the spread, the less you'll have to worry about paying too much or too less. Or selling it for too little or paying too much more money for the option. You want to be in options that have tight bid-ask spreads. You want it to be tight here, and you want to have a lot of contracts here. That's why I advise people to stay in the monthlies. Now, if I go to the weekly and go one of these weeklies, which aren't as liquid, you see the open interest? There is no open interest in here. You absolutely should not be trading in here unless you are an expert, right? And you're seeing, now there are some instances where some people can come in here and sell options, and because you see how wide the bid-ask spread is, but I don't advise people to do that because I've seen traders sell options out of the money and pick people off because they may not know what they should be paying for the option. And so you can sell something that isn't liquid because it may not be priced as accurately to your advantage. But most people are not um, don't understand that process. So I would advise everyone to stay in the monthlies. You can even see on here, look how much wider these are. Right here at 63, the 63 strike, you got what is that, 26 cent, 27-cent spread, 19 cent, 25 cent. So that means that's $25. So if you were to, let's say you bought this, you bought it, and let's say you got filled at 179. You paid $24 more. Now let's say the market moves $2 and your option goes up from 179 to maybe, let's say, 210. But you overpaid by $24 to get in the trade. So if it goes up to 210, you paid 179. That leaves you what? About what, 31 cent of profit, but you overpaid by 25 cent. So you made what, $6, which you gotta pay commissions to get out. You don't make any money. The more you give up getting into the spread, you're probably gonna give up getting out because you're probably not gonna get a good price getting out of it. Stay in the monthlies. And you may say that this looks tight. This isn't tight, 27 cent. I can show you even a monthly at 41 days. You say 15 cent. That's not bad. That's a whole lot better than 25. And you may say, man, what's a 25 and 15? That's $10. That's $10. When you buying an option, you might make 100, $200, right? So you don't want to mess around with illiquid options. Number one rule, stay in the monthlies. Now, there are some instances like the SPY. It really doesn't matter in the SPY where you trade for the most part because it's so liquid. And you can see 5-cent wide options, 5 cent. And this is why the market is closed, 4 cent. And look at all these thousands of contracts because you're in the weeklies. You go to the monthlies. Look how tight it is in the monthlies. 4 cent, 5 cent, 4 cent, 4 cent, 3 cent, 3 cent wide, 317, 320. So that means it's only like $3. So it doesn't matter. You hit the buy option in here, you're gonna get a good price. Tight bid ass spreads equals good prices. So stay in the monthlies. Looking at Apple. Apple is another one. Now this is after hours. The market is closed and it's still tight. Now you don't want to be messing around with options that aren't. Let's look at Google weeklies. Let's go 34 days. Google is pretty. You see how Google right here, look at this option. 262, 296. That's a difference of 34 cents. You don't want to be messing around. That's $34 on one option. The option ain't but anywhere between 262 and 296, and you giving up $34 trying to figure out where you're gonna buy it at. You don't want to be here. You do not want to be here. But if you were to trade Google and you came to the monthly, look, which is we got 10 cent. This one is about 18. That one's 5. And this is after hours. So when the market is going, these will tighten up. These bid-ask spreads will tighten up. So you always want to stay in the liquid stuff. Number one thing, check the monthlies. Look at the open interest. You want to see thousands of contracts. Check the bid-ask spread. If it's a stock that is around $100 and something, you shouldn't have more than 10 cent wide bid-ask spreads. You don't have to look at AMD. It's right around 10 cent after hours. I guarantee you when the market starts up, these tighten up to like right around 5, 6, 7 cent. So this is where you want to be. And it kind of keeps you from paying too much. Now, I always advise people to use TastyTrade because TastyTrade will tell you right away if it's liquid because they have like a little meter to tell you if the option liquidity is there or not. But the number one thing, like I said, open interest, tight bid ask spreads, which I showed numerous examples of. Look at Tesla. Show you another one. Now Tesla's a $244 stock. So you got 20, 30 cents in here, but these are big options. Look at the pricing on these. Now, if this is $1,000 option. Now, if it's $1,000 option and it's 20 cent and it's $20, that's a little bit different from a $20 bid ask spread on $1,000 option as opposed to something that got a $200 option and got this a wider spread. So check this out. Let's go to the weeklies on Tesla. You see how wide it is, 50 cent, but this is a $1,200 wide spread. Option. You see where we're at the delta. We got a 44 delta, 1225, 1275, right? Difference of $50. Now let's go look at that same option in USO. We'll go to the 44 delta. Look at it. One was $50 wide, but it was like a $1,200 option. So it's 6 times this option. But look at this option. $25 wide bid ask spread. Same delta. You don't want to be in here. I don't even know. Shouldn't be no contracts in here. You don't want to mess around in here. That Tesla is a larger stock than this. The options are basically Tesla should have a way wider spread, but it doesn't because it's more liquid. So you just gotta you don't see a whole bunch of people over here. What this also means is this is retail. You never want to be where retail is. You want to be where the hedge funds, where all the big traders are. This is retail. Nobody who's that's trading for a big firm or anything like that, some prop firm or a hedge fund or any type of bank. This ain't this is retail. This is Reddit. This is but 27 contracts. 22, 11, 10, 15. This is right around here. You don't want to be what this is. Now let me show you where you do want to be. This is where you want to be. Look at that. I guarantee you 23,000 contracts were made on Friday. That's what that means. So this is where you want to be. This ain't retail. This is not retail. Look over here. And I was just looking at the call side. You come over on the put side, 26,000, 27,000, 40,000, 46,000. This ain't retail. Some of it may be retail, but these are the big boys, and that's where you want to be. And that's why these option spreads are tight. This is where you want to be. And so when you trade, basically you're trading with the whales. You won't have any problem trying to get out. That's another thing. Over here, you're gonna have a problem finding a buyer. You're gonna have a problem finding a buyer. So you bought any one of these, zero open interest. Only 2 people purchased this particular option on Friday. So if you wanted the 2 people, and you gotta sell it to somebody, guys. You gotta sell this. So you overpaid to get out, and you try to sell it, you're gonna end up losing money trying to get out. So you're gonna lose money getting in, and you're gonna lose money getting out. Stay in the liquid options. Stay in the monthlies. There are only a few stocks, maybe about 5 or 10 that I would advocate you can go in the weeklies, and they pretty much on my watch list. Everything on my watch list, you probably can go in the weeklies and be fine with. Excluding, I probably still wouldn't do Chevron. Chevron, I wouldn't. I own a call option in Chevron. I'm out 69 days, and I'm right at here at 165. so you can see where I'm at, and it's 2,500 options here, and it's a $10 wide spread, right? So, and this is after hours, but I'm in the monthly. And another thing I want to talk about, um, without making this video too long, when buying call options, uh, generally I don't advocate buying call options. If you are going to, in my opinion, it is better for you to buy them further out in time, right? If I'm buying them, I want to be over 60 days, right? 60 or more. And you say, why? Because if I have to hold it for about 30 days, 30 days will bring it down to about 30, right? If I bought a 60-day option and I held it for 30 days, it'd be right around 30. I don't want to be subject to theta decay, right? So trying to buy like further dated options, you're less subject to decay. And when you buy them already, if you buy something already here, you need to move fast. Like you buy the 30, you in 34 days, you got to get a move in like 5 days, 5, maybe 10, but because you're going to be losing, you're going to start to get that theta decay. And then once it hits right around 23 days, the option will really start to decay. And I like to be out at 30 days. So if I buy one out here at 69 days and I hold it 30 days, I'm 39 days and I'm out if I don't get my move. And so in CVX, which I am still holding because I think that oil is going to make a move. I still think that the oil future is going to make a move. Just don't know how long it's going to take. And you can see the oil futures here. Um, let's see. You can see that we got a little up move, pull back, and it's kind of chopping. But if you see, we got like a little channel developing down to the right. So I think it's gonna break out of this move. Just what I think. I don't know for sure, but I think it's gonna break out of here and give us something. Well, we'll see. And so that's why me playing the oil move is how I'm playing Chevron, basically. So with that, guys, hopefully you got something out of this. Hit that like button, hit the subscribe button. If it's some things that you want me to go over a little bit more, I will. You drop some comments in the comment section. Just remember, I know this video ain't as jazzy as the other ones, but I wanted to go over some stuff to make sure you guys, we don't want to make it a habit of doing call options, right? But however, when you got a bull market or a market that's moving up pretty fast, I think you can get away with it. I'm buying them right now, right? Because I think so when the market is doing certain things, there's a time when you can take advantage of that. So right now, in my opinion, you either want to own the shares, and some of these stocks are so expensive, to make any money, buying 100 shares of a $420 stock, in my opinion, it's better to buy the call, give yourself some time. Like I said, I own a call in Netflix as opposed to buying 100 shares of it. I'm right here at I either own the 460 or the 465. It's in another account, and I can't bleep out the numbers on it. So especially when I'm trading in the Fidelity Active Trader Pro, I think that's what they call it. It doesn't allow me to block out my account number, so it's kind of hard for me to bring. But it's one of these, if I'm not mistaken, either the 460 or 465, maybe the 460. But either way, I'm in one of these right here. And now you may say, now this is after hours. So that's why you see this wide spread on here. If the market was open, it would be closer. And also, I'm targeting where I think the market will go. So that's the caveat to being able to pick options as well, especially if you're buying them. You want to be pretty sharp with your technical analysis because you can really make a lot of money if you can pick targets. If you can target, like if you can use your technicals, pick a target, and then go further out in time, you can really make money because the value of this option will gain the closer it get to end the money, and it'll gain exponential value. Like it'll grow really fast the faster it gets there. So I'm already up on the option on both, whichever one it is I bought. I had to look and see. But with that being said, guys, either one of these, because my target actually is on Netflix. I don't want to say it's the 460 because I got a target of 467. So I believe I came in at 460. I want to be peeling out as it's starting to slow down. So I think that's the one that I got. But with that being said, guys, I hope you got something out of it. Once again, please hit the like button, subscribe, share, and give me a topic that you want to hear something on. You want to get more into, and I could do the next video on option liquidity and my TastyTrade account. TastyTrade to me is the best account to trade options on. Like some of this stuff that, like Thinkorswim is really an advanced platform, but the same people that made it made TastyTrade, and then it has everything this has, but it got it to where they just tell you if it's liquid or not. They got a star program, and it'll have the stars on there. And basically, I don't trade nothing that don't have 3 or 4 stars. You don't even want to mess around with the other stuff, right? So it tells you, and they even have an option, a liquid ETF option, watch list and everything. So the next video, I do it in there, and which is a whole lot easier for you to be able to see. Even if you don't trade in the account, I think it would be good to put a couple dollars in there and just open it up. Then you can use that to pick your options, and then come over here and place them over here at TD. Just thought. With that, guys, I'm gonna be out. Peace.